Good afternoon, ladies and gentlemen. Welcome to Market Masters, our special show on business today, where you get to meet the finest cerebral brains on Dalal Street. I am Shail Bhatnagar, and with me is my colleague Sakshi Batra. And our guest today is Mr. Andrew Holland. He's the CEO of Avendus Capital Public Markets Alternate Strategies. And Mumbai-based Mr. Holland is one of the original cowboys on Dalal Street, who landed from the UK into newly liberalized India in the 1990s and has stayed back since over the last 3 decades. He's seen it all, ladies and gentlemen, from the open outcry on Dalal Street in the Bombay Stock Exchange to this digitized demat and online hectic world of stock picking, and of course 5 bull and bear markets with Avendus for the last 8 years, Ambit Investment Advisory between 2009 and 2016, and of course at Merrill Lynch and DSP Merrill Lynch, where it all started from 1997. Andrew, what a pleasure to host you, sir, and a very warm welcome on Business Today.
Thank you very much, and thank you for this wonderful opportunity.
Okay, let's take it and let's take the bull by its horns, as they say on Dalal Street. It's more or less certain that by next Monday, Mr. Narendra Modi would be back at the PMO, and it will be a hub of activity as it has been over the last 10 years or so. What, according to you, sir, would be the top 3 priorities of the new dispensation at the centre?
See, I think all the markets has always been looking for is continuity of policy, and given what we heard yesterday in terms of the BJP-led coalition, that sounds as though it's going to be the same. And so, if the areas of expenditure are going to be, as has been, defence, renewables, railways, and infrastructure, the market's going to be happy with that. And of course, emphasis towards PLI in electronics manufacturing, the power sector in terms of getting us out of a power deficit in the evening. So all of these things, I think, will just continue. So I'm not quite saying it's business as usual, but it's feeling like business as usual.
Wonderful. And perhaps this is something what Dalal Street is also thinking. You've seen a very deep sign of green yesterday. There is a sharp pickup even today, and we seem to be just a shade lower than the all-time high that we saw just this week. So is this, Andrew, still an opportunity to get back into the sectors that you mentioned? And if yes, would you be preferring the leaders, or would you be sort of changing your opinion?
Yeah, no, it's a good question in terms of that. See, I think what happened on Tuesday was that the exit polls were so wrong that we all kind of grappled with what's happening, and of course with that the kind of concern, speculation, usual stuff. When there's uncertainty, all played out, kind of like the perfect storm. And then once you had that time to settle down and think about, well, actually, what will change, and given what I've just said, then all of these. So now you look at these companies again, not very much in the short term, but over the longer term. Will they be beneficiaries of the government spending going forward and the economic growth that will obviously kind of come from that? Because there's a lot of multiplier effects from investing in infrastructure, which will play out in many different sectors. So I think that's what the market's starting to come back to thinking. Now, of course, the question is, is that PSUs? They got hit a lot harder. But a lot of these sectors, as we know, whether it's railways or defence sectors, a lot of those companies are the PSUs, so they will be getting big orders from the government over the next 3 to 6 months and beyond. So the outlook hasn't really changed for them.
Okay. Andrew, how about this narrative that is building up that probably money should now start shifting to defensives, FMCG, IT and pharma? Are you also believing that these are the spaces that may now take the front row now, and because the other spaces that you just discussed have already outperformed in Modi 2.0? Or do you still see in Modi 3.0 the previous favorites will continue to outperform?
Yeah, so I mean, there's obviously been, the narrative changing towards, more populist measures in terms of increased spending, which will get the consumption story going, and that's why you've seen a lot of the FMCG companies start to outperform. But it's not as though that spending is going to lend itself to their kind of revenues doubling or even going up by 30%. So I can't quite buy into that defensive story with a growth story as well at this point. In terms of IT though, given that we've seen Canada reduce interest rates, the European Central Bank will probably reduce interest rates today, and some of the jobs data in the US pointed to a slowing down and wage growth too. That interest rate cycle might be turning, and that's good for IT. So if I was goes for defensive, I'd go with IT now, with the growth prospects of the industry kind of bottoming out as interest rates start to fall.
Okay. How about banks and financials? Where do you see them going, forward from here?
No, I'm very bullish on the banking sector. I think, the private banks have been unloved for some time now. I think the last quarterly results showed that NIMs were probably at the bottom of the cycle, and if anything, we can start to see growth again. The bond inclusion in JP Morgan's global index, I think again will bring money in, bring bond yields down, and guess what? Bond yields go down. All the banks are sitting on a lot of bond holdings, so mark-to-market gains are going to be there. I think the market's just ignoring sector. Listen, if your economy is going to grow, the way we think it's going to grow, then the banking sector has to be a big beneficiary of that. So I'm very bullish on the banks.
Wonderful. And Andrew, this is a topic that I also wanted to touch upon. You've been a part of our world since the mid 1990s, and you've seen how India's fiscal balance sheet has improved dramatically over the last 5 years. RBI's dividend, which is double than what was estimated, this tax buoyancy, and of course this GST number that keeps on rising each month is something that is a crisis of plenty, so to say. How do you see this, this underappreciated part of Indian markets, which often doesn't come to the fore, the strength of the economy now?
Yeah, I think that's what I think that's what investors like about India now, is that you've got this kind of solid growth because of the capital expenditure. You've got revenues coming in on the areas you've mentioned. For the government to kind of spend in terms of infrastructure, trying to build up manufacturing through PLIs, and not really kind of still being fiscally prudent. And I think that's what the market's been liking. Now you could argue that with what happened recently, that maybe that premium that India was enjoying because of the majority of the BJP might have kind of been eroded slightly. But if you look at the longer term, then the economic story is still very compelling. So it's all a matter of whether you want to buy into the valuations at these levels. And I think if you think 3 to 5 years down the road, where would these companies be? What would their earnings be? Then there's still very, very many compelling stories out there.
Okay. And the fact that at least there are some indications from smaller global central banks that cut in interest rates is in the offing. The Canadian Central Bank just cut yesterday. The ECB is also thinking in those terms. Globally, how do you think is the interest rate cycle placed?
Yeah, I'd love to be able to kind of give you a direct answer to this, because I think we've all grappled over the last 2 years alone, particularly with the Federal Reserve, in getting it completely wrong, right? So I think I'm just going to go with the numbers now and see, because 1 week you'll get jobs data which is showing a slowing of the economy, and the next week it'll be different, and therefore the bond market's just going to move up and down. The equity market doesn't seem to care. It's just going up. So we've got that global backdrop where markets in US and Europe now are hitting new highs, and that's helping to drag Asia forward too. If China gets its act together, then that's probably the last leg of the kind of rally for emerging markets in terms of pushing assets away from or funds away from developed markets back into Asia. And obviously India would be a big beneficiary of that. So, the global factors, I think, are playing less in terms of our markets because I think we have our own story.
Okay, we have our own story, and this is what exactly I wanted to ask you on the FII's behavior now post the election results. 2 days we've got the entire news getting digested. Finally, an NDA coalition government would be in place. How do you think the FII's behavior towards the Indian markets will change now? Are they convinced with this coalition government the way things will be moving forward, or will they wait until the budget gives us some more clarity as to which way the markets will steer?
So the FIIs will grapple with two things, to my mind, is one, should they go back into China in a big way? Would India be a kind of a funding mechanism for them, which we've been seeing over the last few months because of the valuation difference? And I don't think anyone wants to miss out on the China rally after years of pain. So that's the first thing that they'll be looking at. I think you're right. I think they'll just wait now to see, what the government looks like in terms of which ministers are where, and also wait for the budget to see if that gives them that clarity that the policies, the kind of fiscal discipline is continuing from what we've seen in the previous 5 to 10 years. And if it is, then I think that they will come back to India because it's a compelling story for them, although valuations remain challenging.
Okay, and the other important factor is that the world markets, including the US markets, they're also soaring to record high levels. S&P 500 recorded its 25th record high yesterday overnight, and the Nasdaq continued to do that on the back of such AI names like Nvidia. So when there are such options available, will FIS continue to pour in money in India?
You see, you've got, obviously we're talking about two different sets of investors here. One, obviously, any emerging market investor would have to come to India because of the weightage. So it's whether you're looking at emerging markets versus developed markets. And in developed markets, if you take the US, for example, you're talking about 7 stocks. So you're relying really on 7 stocks to make your money. Because the rest of the market's not. Whereas in India, you have some compelling cases across different sectors, and of course, it's to my mind, it's very easy to think if you believe India is going to be a $10 trillion economy, and you can give whatever timescale you want to that, then your market cap to GDP is usually around 100%. So the market cap will be $10 trillion as well. So in that, you'll make a lot of money.
Absolutely. And that, Andrew, brings me to the hedge fund that you run at Avendus Capital Public Markets, Alternate Strategies. I'm sure you will not be naming any stocks, but I just wanted to understand what are the sector weightages in terms of maybe the top 10 stocks, and what is the, how should I say, construct in terms of number of shares that you have in your fund?
Yeah, it doesn't quite, work in that respect because obviously, being a hedge fund, we don't have to be in any particular sector or any particular stock at any time. So it can be, more opportunistic, which is, been the last few days of where you should be kind of, taking some of your picks. So the banking sector has been one of them. So a little bit more overweight on the banking sector at this present time, and probably more underweight the kind of FMCG because they had a great run, but I don't think the fundamentals justify it. So, and obviously we're using options as well to kind of hedge or benefit from the market moves.
Okay, now that's an interesting thought. Maybe you should conduct a couple of classes on how to trade on options. The entire public in India is hooked onto options, just as Mumbaikars such as you love misal pav. Be that as it may. The other thing I wanted to understand, Andrew, is this expansive growth you mentioned, $10 trillion, maybe 7-8 years from now. But in the near term, say over the next 18 months, when you look at the Indian markets, where will the maximum wealth be created? Will it be large caps? Will it be, the much loved small and mid caps? Where do you think is value to be had?
Yeah, that's always a difficult question to answer because it's really trying to say where you believe is the most value at this point in time. And of course, it's a broad. But if I say I love small caps, it's a very broad brush I'm giving you, right? Which small caps, in particular. The way I would think about it is this, and then it falls into large caps, mid caps, and small caps. Is what are the themes that are going to play out in India over the next 3 to 5 years? Now we know defense, renewables, power, railways, is going to be capital expenditure over the next 3 to 5 years. So we know that's going to be a growing area. But if you look beyond that and say, experiences, I'm sure you both, will go and travel. You don't want to just stay in the usual hotels. You want to have some different experience. So airlines and hotels will be a theme, which I think is just at the beginning of the runway. Electronic manufacturing is again, it's to my mind, it's just, if I think about the telecom sector, back in 97, 98, yes. That's exactly where electronic manufacturing sector is now. So it's a huge long runway. And finally, I would say premiumization. Now, I'm looking more at beverages, not just alcoholic, but non-alcoholic as well. I'm sure, in your building, you go down and you buy from one of those expensive coffees or teas, which you probably would have bought at 4 or 5 years ago. But you do it now. And I think we have a younger generation who are not price conscious. They'll just go for what they feel they like.
Yes. Absolutely, that's a wonderful way to put it. So we are going to be keeping an eye out on all these themes that you've mentioned. And one more thing which I wanted to understand is on the broader Nifty picture as to how that is going to shape up over the next 12-18 months odd. Are you going with low expectations of return this time around after this entire biggest event probably of the year has panned out? And of course we will be having the budget. But do you think there is much more to go in the Nifty?
So the way I think about the Nifty is this: is that I think that the growth will be, in terms of the index, rise or fall, but rise would be the right way to look at it. That now it should be in line with earnings growth. Now, if earnings growth is around that 12 to 15%, that's where I think the Nifty would end up by the end of the year.
12 to 15% growth on the Nifty by the end of this year. And what happens to all those projections we were hearing all across, Nifty to double in 5 years? Is that going to be on course, or are we going to see some dwindling on that?
Well, I think if you do 15% compound of the market, you're probably getting there anyway, right? I think in terms of the Nifty, I would just go in line with earnings growth. I think the money to be made is beneath the Nifty in terms of the themes that I've outlined before. I think that's where you're going to make the most money.
Okay. Andrew, I'd just like to get your attention back to one of your favorites, one of your current favorites that you mentioned, the software space. If you look at the NASDAQ, a record high, and the 7 stocks that you mentioned, whether it's Nvidia, Facebook, Google, Alphabet, Microsoft, so on and so forth, are almost all of them at record highs. But here is the Indian IT sector, which is just languishing. Now, if you were to pick and choose and allocate capital, what would you go for? The mid caps in the software space, or large caps where valuations are attractive but there's no traction in earnings, there's no hiring happening, there is deals are getting postponed. In this chaotic space of IT, what is your preference?
My preference is the large caps because the valuations are more compelling at this point. And I think once the sentiment turns and the narrative goes back to, yes, interest rates lower, growth will be coming back and we've hit the bottom, I think most foreign investors as well as local investors will go for the large caps first, because you get a margin of safety as well. And then as that plays out, then you can go to the mid caps. So large caps first, followed by mid caps.
Fair point. And you also mentioned the private banking space, which practically hasn't done much over the last 4-5 years. Some of these stocks, including the large cap IT that you mentioned, have been characteristic of traditional portfolios that we've seen on Dalal Street. People just hold them for near decades. Is that true for Avendus as well? Have you been a holder for them passively over the last so many years, and you're hoping that the tide will turn? Or will you be entering them now and then maybe look at creating fresh alpha?
Yeah, the good thing about running a hedge fund is that I don't need to take those kind of longer term views, because really you're looking for making alpha for your investors, not just over a longer term, but over kind of a consistent period. So, if the banking sector's out of favor, I don't need to be in it. I don't need to have any weightage in it if there's other sectors which are more compelling at that time. But I do think now that the time is right for the financial sector. And I saw a report today saying that HDFC Bank could be included in the MSCI in terms of a rejig, and that would bring in a lot of money, not just for HDFC, but I think would again be a catalyst for the banking sector to finally start outperforming after being a massive underperformer of the Nifty over at least last